Here we are. It's a Freaky Friday, and we are looking at what has happened this week. And today, there's been massive amounts of news in the traditional market. Well, not in the traditional markets, but like in the European markets, I should say. I could argue they're traditional. I think they had like the first stock market, but I'm going off topic here. um, but anyway, we have a lot of news coming in for you today, and also later on in about 12 minutes' time, we're going to be reporting the PCE numbers from the USA, and this is going to be causing a lot of volatility. AJ, what's been on your mind recently, and how are you feeling about what we might be expecting today?
Yeah, so looking talking about the chart side of things, we are at resistance on those shorter time frames, and we do have some more patterns to look at. And we are going to get a pretty big move soon. I do anticipate a big move is coming because since the
Squeeze.
approximate level of the 13th of September, we have been just trading sideways, really. We haven't seen much movement at all. Over the course of September, we have seen that price pull back, and it's stayed traditional to September is normally a bearish month, but we have just been ranging sideways since the 13th of September. So I do expect a big move is going to come. And where that move is going to go, whether it is towards the upside or towards the downside, we are unsure. And we will look at that a little bit later. For me, right now, the move towards the downside is a more realistic target, as I'm sure you're all aware. We talk about this a lot. But yeah, there is a possibility we could break towards the upside. But yeah, we'll get onto that in a moment.
I mean, Charlie is probably what whatever you've just said here, Charlie, is what everybody feels. As soon as you buy, it just dips, and you're like, "What the?"
Yeah.
Like, it's annoying. But anyway, hello to everybody. Shout out to everyone. Crypto Invest, good morning. JK, good morning, and also as well to you as well. Well, I say good morning, but like for me, it's the afternoon, and for him, it's like lunchtime. But anyway, we'll get into this right now. So just having a look at I'm gonna come back onto this. Oh, also, this is another really big thing I wanted to show you. The Russian president, so he's basically having like an annexation speech. So this could cause a lot more tension between the West and also Russia because he's declaring that parts of Ukraine are now parts of Russia. And obviously any attack on Russia would if Ukraine, so if I don't know, NATO forces move in to those annexed areas, that could be a declaration of war. Just something to keep in mind. But anyway, keeping it very much on track for today, it was a massive day, guys. It was ginormous. As you can see here, we had news from China, India, UK, France, Germany, Euro area, and also Italy. And we're anticipating some from the USA. So just to give you a recap as what we saw. GDP growth rate for the UK, that's up 4.4% year over year. That's actually really, really good. Much less than the revised, but it's good. Inflation rate in France, it actually came in less than expected. Another bit of good news, which this means that we could see a little bit more money moving back into the euro area potentially. But then we have unemployment change from Germany. So unemployment change. What we want is when central banks are looking to squeeze an economy, they want high unemployment, okay? Because they want companies to get smaller, they want the economy to get smaller, they want us to get poorer, so we stop spending money, and then inflation goes away. Inflation change came in at 14,000, which is below expectations, which means it's not good, and they will, in fact, have to do more tightening for a longer period of time. And just to kind of add this in, we saw the inflation rate for Germany come in at 10%, which was more than what was anticipated. So we looked at this yesterday, and I mentioned on the live stream, I said, look, if Germany is coming in above expectation, I would anticipate that we see the euro area because Germany is the biggest economy in the euro area. And what do we know? We have core inflation from the euro area coming in higher than expected. So it just kind of seems a little bit crazy, slightly predictable. But again, this overall picture of the euro area is that inflation is still getting away from them. And so typically that has been historically up until now what's pushing the DXY up, because
Okay.
everyone just thinks, well, why don't I just go to the reserve currency? And that's why we're
Yeah.
seeing this big move here. And then a bit of news from Italy. But, to be honest, although they contribute to the euro area, they are a relatively smaller economy. I'm just going to drop into a little bit of news just with these two, and then I'm going to go and through and explain this, which looks boring, and I know it does. It's okay. But stick with me. Little bit of good news. AJ, this is one thing that I'm really excited about. BlackRock. Do you remember we did a video about them? I think actually, maybe it was just myself,
Yeah, I
but we
think it
did
was
a
just
I did a
yeah.
video about them. Was it managing around? I want to say 11, but between 10 and 11 trillion dollars as assets under management, and they
Crazy
have the
amount.
partnership. Yeah, these are the guys who have the partnership with Coinbase. Anyway, biggest asset manager in the world. They're now going to introduce ETFs into 35 blockchain related companies, which is massive.
Yeah.
And I would say each of these 35 companies will grow ginormously.
Yeah.
Because BlackRock are the second largest holder of pretty much every major stock because of these ETFs. If someone wants to buy into the ETF, they say, hey, I have $100, put this into the ETF, then they have to go and buy a small percentage of each company in the ETF. Hence why they've become the second biggest, owner of Google, Facebook, Tesla, pretty much every company in the
Yeah.
world.
I,
Um,
I think right now, it's not the best. Well, you could look at it two ways, as being not the best thing to invest into, or a very good thing to invest into. Because if you look at Coinbase, I've looked at that recently, the Coinbase chart, and that has just non-stop been going down. Yeah. So right now, maybe it's not the best thing to be investing into. As crypto potentially has that next leg down, we could see these companies, we could see their stocks, the crypto companies, their stocks come down as well. So maybe it would be a good idea to wait until crypto bottoms, because I do think they are they're going to be fairly correlated, aren't they?
they will. And to be honest, even within this, I would say, look, like exchanges and miners are probably going to recover quicker, but blockchain companies, although they have the most potential, I think they will do worse for a longer period of time.
Yeah.
Because at the moment, everyone's so hyped around cryptocurrencies, the likes of like a Bitcoin or even like an Ethereum. But I know they are that, like people don't think about the companies that are introducing the blockchains into certain areas or projects. Everyone at the moment is like, oh, I should invest in Binance because Binance are in the center of everything. But I think long term, the companies that can work with the Fortune 500, those blockchain focused companies who are not just, selling a coin just or creating an NFT platform because it's sexy, I think it's those professional ones that will do better long term.
Yeah.
But at the
I,
moment,
I
yeah,
think
I
in the
think
long term
miners
they
and
will do
exchanges.
very, very well, though. I think they will, but right
Yeah,
now it's just not looking good
yeah.
for them.
Oh, it's not, no. And also, we're going to explain in a second. Things aren't looking good. And and just to mention here what we're looking at for the traditional markets. So sterling again is down. It's just rubbish. Um, Dollar has strengthened. Treasuries have rebounded. So kind of moving again a little bit to the upside. And we are looking at the Nasdaq tumbling almost 4% in this on Thursday, sorry, and 2% for the S&P 500. So actually seeing this, the volatility index obviously has continued to go up because everything's volatile. But I do just want to quickly mention, should we go on to AJ? I'll let you, guide this. Do we want to either give people a quick understanding about PCE and what we might expect and how it would affect the markets before it comes out, or do you want to jump onto the Nasdaq?
Um, you go on with that, and then we'll do all the charts at the end.
Okay, okay.
Yeah.
Guys, I'm going to keep this relatively quick. Basically, PCE core is similar to PCE, but it has less stuff in it. Okay, this is what the Fed like. The Fed want to follow this, and so what they've done is they released this big ugly table, and they say, look, by the end of this is our projections, summary of economic projections. They say by the end of 2022, we want to have these numbers. Okay, this is the median. There are like high ones, there are midpoint, there's low, low ones. So they say, oh, if it goes crazy, then we expect this. If it goes okay, we expect this. But ideally, this is what they want to be achieving. This here. So they want unemployment to go up, which is obviously, this previously was at 3.7, now it's at 3.8. And so PCE, they want this to be at 5.4. So PCE, the expectation is 6.3, or that was what it was previously, I should say. And so they want this to come down. If this goes up, it's going to be bad for the markets because it's going to show that these guys are wrong and don't really know what they're on about. Core PCE inflation, 4.5. Let's have a look at this. Currently forecast for 4.7. So we're on the wrong, we're going in the wrong direction. So if this comes in, at a 4.8, it means that we're going to have quite a big slowdown in a short period of time. We're only going to have if this comes in at the end of September, we're going to have to very quickly plateau and start coming back, all within 3 months, to hit this target of 4.5 here. So this is what we want to have a look at. And also they say the Fed fund rate needs to end around 4.4, which if I just bring this up, I know something that we mentioned quite a lot. You see, so you notice the other day there was the chance of a 50. What was it? I can't remember, what was it previously. There was a chance of something. And I said, look, I don't think there's ever going to be a 25 basis point or whatever. I think we're definitely going to see a 75 basis point here to bring us up to that 4%, and then a 50 basis point. And so now that's what the market is kind of pricing in. You see, it's changed. So yesterday it was 53. I think the day before it was much less. But yeah, now it's at 59. And this is what I've said all along. So this is what I'm kind of expecting from this bit of news here. So if we're coming in, like I said, above that 4.7, we're going to see the market move to the downside. And I think the same is true with this. But although there isn't really, a forecast here. So there we are. Should we have a quick look at maybe the DXY, and we can have the DXY live as well as Bloomberg, so we see what's happening?
Yes,
Like on a smaller time frame, if there's any immediate reaction.
Yeah,
But this is only the short term.
Yeah,
Sorry.
we'll look at the shorter term. How long until that comes out?
Should be like now.
Okay. Yeah, as we can see on this bigger time frame on the daily, we are in this massive uptrend. I did post this on Twitter, so make sure you follow us over on Twitter as well if you don't already. I'll zoom into let's have a look at the 3 minute. We are getting a little push towards the upside on the 3 minute chart.
Okay. Let's have a look over on. Okay. Do you want to put my screen up? So personal spending rises 0.4 month over month, estimated 0.2. Okay, this is one thing. It's kind of good for the economy, but it's bad for the Fed, because the Fed basically want everyone to stop spending. They want GDP to come down. They want everyone to stop spending. They want people to have no money, basically. So then inflation goes down. So it shows that there's so much money being tossed around in the money printer. I'll bring the sound up. Let me know. Can you hear this? AJ, no?
No.
Maybe I can bring this up.
I can hear it somewhere very faintly.
So, okay. Basically, we have it here. We don't really need the commentary too much. But look, guys, it's a core of PCE of 4.9. So look, this is crazy. So 4.7 was the forecast. 4.9, like I said, this shows that the Fed are going to have to do a lot more to try and combat the current PCE when their goals are around 4.5. So we're going in the wrong direction. We then need for maybe next month it to kind of stay at 4.9, and then we need it to start coming down to like 4.7, and then down to 4.4. And that's a big ask. That really is a big ask. And so that might mean the Fed are just like, right, we're guaranteed we have to stick to these higher rates, and so we will see pain for a lot longer. And again, yeah, the PCE price index, this is at 6.2, whereas the end of the year target is 5.4. So a lot of work to do from the Fed, and I think this just pretty much verifies the Fed are not going to be our friend for any time soon. Should we
No.
jump onto the Bitcoin chart, see if there is any major reactions in these charts?
Yeah, well, we are actually seeing a negative reaction. So if I just pull up my chart here, and we
There we
will
go.
pull up
See,
the Bitcoin
crypto hates
chart.
the
So,
Fed.
sorry?
Crypto, we just hate the Fed.
Yeah, yeah, don't we?
Uh,
Don't we all? So basically, looking at this, this is a 1 hour chart. We can see from the start of here, 13th of September, we've been in this massive, massive sideways range. Right now, what we can see is we are seeing a bit of a pullback within crypto on within Bitcoin on this 1 hour time frame. And the reason we are seeing that is because we are getting a lot of resistance up at approximately between $19,600 and $19,730 approximately. We're getting a lot of resistance there. So for this massive range that we've been in since the 13th of September, the value area high is sat at 19,700, as you can see right there. And we have touched that level twice, and we have seen rejections from that level. We also have from this shorter time frame here, we also have the golden pocket, taking it from this pivot high to this pivot low here. And we do have this golden pocket coming in perfectly aligning with that value area high. So we have some confluence there. And you can see Bitcoin is finding it very, very tough to get above this level. I have just seen that Esteban has entered a long position. Now, for me, I'd be waiting to open a long position. I'll be waiting to see if we could get a break above this level and then retest it as support and then get the bounce. That's what I'll be waiting for. For me, it's a bit too risky to be opening up a long right now because, as you can see, every time we've come up to this level or close to this level, we are seeing a rejection. And we are getting a pretty harsh rejection from this attempt of the test of this golden pocket right here. We didn't actually touch it to the dollar. I'm sure on other charts we will have, on other exchanges we will have, but on this exchange we haven't, which is the Bitcoin USD perpetual contract. And as I said, we have a lot of resistance here, so we are going to find it very, very tough to get above this level. And I wouldn't expect to see any bullish price action above this level unless we can get that. Obviously, if we can't get a break above that level and then hold it as support. So I would want to break and then a hold of support and the bounce for me to think that we could have any bullish price action towards the upside. So the next level that I am looking at the price coming down to is this golden pocket here, which is from the swing low to the swing high of this level here. So it is going to be support. This golden pocket will act as support. As you can see here, it's acted as perfect support. We got the bounce and then we came straight back up to the next golden pocket, which is the resistance golden pockets. So I would expect, if we do continue this price action towards the downside, I would expect the price to come down to this golden pocket again, which is going to act as support, but there isn't confluence there. So for me, there isn't a solid support level for taking a long position. I was considering taking a long here, but there isn't confluence there for me. So I do think if we do, I do think there's a high possibility we could break this this support golden pocket here, and then we would come back down to the value area low, which, as you can see, has been previous support as well. So that's my expectations. Looking at the DXY, it's not looking good for me on the DXY because we could be forming this higher low right here. As we can see here very, very clearly, we are in a massive uptrend, forming higher lows and higher highs. So we're in a very clear uptrend, and I am expecting the DXY to form another higher low. This could potentially be the higher low right here. The previous higher low was at approximately 107.7. So this could be the next higher low. We also have a weekly level of support coming in here as well. As you can see, we are getting slight support on that. This is a daily chart, but it is a weekly support level. So right now, for me, it doesn't look too appealing to open up a long position unless we do break those resistance levels here on that shorter on the shorter time frame. So right now, for me, it would be looking more likely to open up a short position. But I do think we've missed that short position. The short entry would have been at this golden pocket area here, so I do think we've missed that. But yeah, what we got to do now is wait for those next support levels to be established, and then we can act off of that. Taking a look at the 8 hour, the 4 hour. Taking a look at this, we can see we have a daily level from the 7th of September. We have respected this daily level very, very well on the 4 hour, on the 8 hour, and on the 12 hour. We haven't actually had a 4 hour break below this daily level. So if we go to the daily chart, as you can see, it is a very well respected daily level. And even going back here as well, we've tested it as support as well. But on the 4 hour, if we zoom in, we can sort of see that we are forming this descending triangle. Now, descending triangles, as we know, are bearish. This is on the 4 hour. We do have another descending triangle, which is on the daily as well. But looking at the one on the 4 hour, I do think a big move is going to come. And I do think the big move is going to come once we get the break towards the upside or the downside of this descending triangle. Now, the likelihood of it is a bearish, a bearish pattern. So the likelihood of it is that we are going to break towards the downside, but there is a possibility we could break towards the upside. But the reality of it is it's looking more so that we are going to break towards the downside rather than the upside, because, as I said, the DXY is still in this massive, massive uptrend. Just, if you just zoom out and look at the macro trend, we are in a massive uptrend on that DXY, and I am expecting that to continue if we do stay above this week.
I'm sure he will be back.
I'm back. I'm back, which
Okay.
will be very bearish for the traditional and the crypto market. So I do think a big move is coming. The thumbnail was not clickbait. I do think a big move is coming because we have been ranging sideways, as I said, since the 13th of September. When we do range sideways like this for a long periods of time, we do tend to see big moves. For example, a bearish flag, a bullish flag. When we do consolidate, we tend to see a big continuation either towards the upside or towards the downside. In this case, I do think it's going to be towards the downside with all the fundamentals and all the technical analysis that we are seeing as well. It's all looking very, very bearish. Now, if we were to get a break towards the upside, and we did get that push towards the upside of this here, then we do have resistance coming in. If I just draw that in for you now, we do have resistance coming in on this 4-hour chart at around $20,426. As you can see, that lines up there with this previous high, and we've used it as resistance back here as well, and resistance here after the break towards the downside. So that would be the target for me if we the first target if we did get the break towards the upside. The second target would be at the very top of the descending triangle, which would be at $22,790 if we got the break towards the upside. That's only if we got the break towards the upside. Now, for me, it's looking more likely right now that we are going to get that break towards the downside, because, again, looking at the DXY, we're still in that massive, massive uptrend, and it doesn't look like it wants to break that uptrend anytime soon. So for me, the likelihood of it is we are going to break towards the downside, and I am going to be preparing myself for a short position. So we can actually take the target, so from the top to the bottom of that descending triangle, and take it to the potential breakout point. This could give us a target of around $14,000. Now, that actually lines up with a monthly level of support. So if we go to the monthly chart and we look back, okay, so we'll have to go on to another chart because this doesn't go back further enough. So basically, what we have here is we have a target. If we get the break towards the downside, we have a bearish target of $14,000 for this descending triangle. Now, if we go on to, let's say, let's go on to this chart here. Hopefully this one will have it. Maybe I have it in here somewhere. Let's have a look. Sorry. Where is it? Okay, right. Let's go on to there. There we go. Sorry, I had it on this chart. Didn't have to look for it. So we've got this monthly level here, and that comes in at $13,900 approximately. So $13,880. So that lines up with this bearish target at $14,000. Very, very close. So if we were going to get that break towards the downside, I would expect that to be the next level. Why is this a support level? Well, if we look at the monthly, you can see here it was the candle high from back in 2017, back in 2018, and we've also retested it here back in 2019, June 2019, and we got a perfect rejection from that level as well. So for me, this is going to act as some support, and as we can see here, it is a major resistance, previous major resistance level, so it is going to act as support. Now, if we do come down to that level, there is a possibility we could break it, because as I said previously, if we do break this level that we are at right now, this major support level here, I do think 12,000 is that next target. But of course, that monthly level is going to act as support as well. So around $14,000 is the target if we do get the break towards the downside of this descending triangle. And that also lines up with this monthly level as well. So I think we could, if we do come down to that level, I do think we could find some slight support. But if we do break that, then 12,000 is most definitely going to be that next target. So for me, it's looking more bearish than bullish right now. The bearish scenario for me is the one that I see playing out, as in the break towards the downside of this daily level, and then the move towards the downside.
Quick request here from Devon. Can you add a fib, good old Fibonacci, on the monthly?
Yes. Where do you want to go from? Support or resistance? Because we can go from the high to the low, but that's sort of that level. Let me have a look. Let's go
Devon, drop us a
from
little note.
let's
Where
go
from? Where to?
from down. Let's go from the 2017 low there. Let's have a look. I mean, if we come from the low from 2020, so the COVID crash, and we take it to the all-time high, if we're looking at this range here, we can see that the fib actually, the golden pocket does actually line up with this major support level. So, if we're looking at it this way, there's lots of confluence there for support. So the 0.618 level, yes, there is a confluence there with that major support level. So thank you for pointing that out. Yes, we do have lots of confluence there for support. And if we broke that monthly level here, this purple monthly level, then that would be the next target. Now, as you can see, the 0.66 level does actually come all the way down to close to 10,000 as well. So there is that possibility we could come down to 10,000, close to 10,000, and stay within that golden pocket, which for me would be major support. We know that Fibonacci retracements, they are major resistance levels and major support levels. If I look on the shorter time frame, you can see that it played out as perfect resistance here, played out as perfect support here. So Fibonacci retracement levels, they are very important levels. So yes, this lines up with a major support level and will be a critical level if we were to come down here. It's just more confluence and more confluence telling me that 12,000 is going to potentially be that bottom vicinity, maybe a wick lower, but around that area is where I do think the bottom could be if we do get that break towards the downside of this level that we are at right now. So yeah, thank you for pointing that out.
Yeah, there you go. Right. Well, I mean, look, we've pretty much gone through everything. The story is that it's not very good. Obviously, with PCE coming in higher than expectations, it's just another thing that's kind of like, right, we have more issues with the overall economy in the US, but then also we have higher inflation in Europe, which again is just going to drive more people who don't know what to do, going to buy more dollar, going to buy more bonds, especially when the yields keep going up. So we're even, I think, we're still not there, because with bonds being so appealing, stocks are going to continue to crash. Money's going to continue to move into bonds. And once the bond yield starts coming down, that's when we know people are buying bonds. The yield is still on the increase. So only after the yield starts falling will we begin to see that people are actually buying bonds. And then they'll probably wait even another couple of weeks or so before they start buying some risk on assets. So we're still not out of the woods just yet.
I've got the chart
But
pulled
yeah,
up here. As we can see, the yield is coming down, so people are clearly buying bonds
that's
at the
good.
moment. Coming down to a support level here, so we'll see what happens.
So potentially beginning to see, this shows because when the yield comes down, it means the price has gone up. It's got an
Yeah,
inverse relationship. So obviously the price is going up because lots of people are looking to buy them, just supply and demand. So
yeah,
so this is a good sign that people are buying the bonds. But
yeah,
obviously, if you're buying bonds, that means that we're still going to be expecting another while of more downside to stocks because people are going to be selling stocks in order to buy bonds. So that's
yeah.
really something that's not great, and pretty much is the whole story, isn't it?
Yeah, and looking at that S&P, we are testing that major support level. As you can see, previous support here, going back, dating all the way back to 2020 as well. We can see we've used it as resistance before the break towards the upside, and then we've used it as more support as well. So this is the next major level, and we are getting held up quite well at the moment by the support level. But as I said previously, if we break this level, I do think we are going to see a big bearish reaction to that, and I do think we could come down to around $3,230 as that next target. And I've just seen we've got close to 40 people in this live, so if you could smash that like button, it would be much appreciated. And yeah, it does really help the channel out.
Yes, and it's also free. Not many
It's
things are
free,
free.
yeah. Yeah.
Exactly. Another thing that is free, guys, is if you do want to follow us while as we're trading, and obviously once we're finding these bottoms when they are coming in, we're going to be jumping in. Make sure you click the first link down in the description to join either Bybit or Femex. Get up to $4,250 back whenever you sign up through us. And it's just a really good way for us all to be trading together. As you know, some of you guys have done it before, and it's worked out really, really well.
Yeah.
So we're looking to do more of that. But yes, hello from Australia. Hello to everybody from pretty much across the world. Some Aussies in here, and then a couple
We've got
people from
someone from
US. UK.
Colombia. I
Oh,
forgot who it was. It's from Colombia.
I think that's Esteban, no?
Oh
I
yeah,
think
yeah,
it's
that's it. I'm not very
Hola,
good at
Esteban.
remembering names.
Yeah, I'm not very good at Spanish. I wish I was though. But anyway, okay, guys, thank you very much for watching. Drop a like on the video and subscribe to the channel if you haven't already. See you later, and we will see you for the craziness that's happening next week.
USA. See you later, guys. Thank you.
Take care. Bye.